guys? Hopefully you're having a wonderful day. We're gonna add another concept to the series. We're gonna be going over order blocks. So this is a pretty hyped up, I guess you could say, concept of ICTs. It's basically when you have, for a bullish example, when you have a low get taken out. So you have the down move, then you have the up move. So this is like as if there was to be like a move higher, so a confirmed order block basically. And then so let's say it's down candle, so something like this. So the last down move in a bullish example, guys, so the last down move would be the order block that takes out liquidity. So this is the order block. It's like the change in state of delivery, guys, right? So what we wait for the change in state of delivery, like I teached, I think 2 videos ago, you want to wait for the last, for in a bullish example, right? You want to wait for the last down candles in a row to get violated. Especially, we're talking about the open, right? Not the wick. So if there's a wick, don't really pay attention to that too much. So right here, you get the change in state and the order block is formed. And now you could expect price to come up here, come to a discount where the order block is, and get a bounce, something like this. So it's basically just, it's the down close candles before the bullish move, and it has to take out liquidity. Yeah, so there's a couple of indicators that some order blocks are more high probability, but we'll go over that later. So in a bearish example, we have a high right here, and we come and sweep it. All right, guys. So in this instance, the change in state and the order block would be this candlestick because it's the last move before the bearish move, and it also takes out a form of liquidity. So this is it right here, and you can expect price to come and retrade back into this price level and for it to act as a form of resistance. Another thing you guys want to be paying attention to is the displacement through the level. If it's just weak and slow, then it could be a low probability order block and change in state of delivery. If it's strong, then it could be a high probability. So you really want to see a strong move below it, a lot of displacement, and that'll confirm a strong level here that could hold. And also what you guys could add into this is a fair value gap in the mix of it. So if there's a fair value gap that forms here, for example, this is an even higher probability of an order block right here to hold and play out in your favor. Same example for this. If there's a order block and a fair value gap, it makes it even more high probability. So definitely keep that in mind. We're gonna go look at some examples here on the charts. And keep in mind, guys, I don't really use order blocks. I just use them as targets and as extra confirmation. If I just see an order block, I'm not gonna enter based off of that, right? Okay, let's look. So we get a sweep here. Let's look if there's an order block. Let's go down to the 5-minute. Right there. So essentially what price does is comes above it, digs down into it, and how far does it go? Well, we have a imbalance here. So it also comes into the fair value gap and holds as a form of supports. Comes a bit below it. That's okay because your stop would be at least below this fair value gap. So that's one order block here. There's also an example here too. Low gets taken. Now you want to go in a lower time frame, because or else it's all the way up here, and I don't think you really want to wait for that confirmation. So you would definitely go down to a lower time frame. See what we have here. Last down candle is here. it's ran through. So this would have been a lost trade. And if you had high conviction that this trade was gonna play out regardless, you could have waited for a extra confirmation to the upside. So for example, not this, because there's no order block here. This is it. If it were to strongly go above it, we have this. So here would be your entry. So you'd get one loss over here, and then a little entry over here for a small, a little win, you know. Yeah, so it'd be something like this, for example. So you have your order block here. For it's the last down move before the liquidity was taken. So your stop loss. You target these highs for a 1 point. Yeah, I would not target that. It's too close. So target this gap here above the highs. Right there. First take profit there. Of course, you come back down to break even, but then the market ends up trading into your take profit. Also, you could put it at the consequent encroachment, which is the midpoint of this gap here. So something like this. Something like that, and call it a day for that trade. Let's go over a higher time frame example here. Let's go on like a hourly and see how the order blocks play off on lower time frames from a higher time frame order block, right? So let's go over here. Our last down move before liquidity was taken was right here. So let's mark that out. Order block. So as you can see, we came above it, held the body's held as support, and then we ended up coming back down into it, and we did trade a bit below it, but there is a fair value gap here. So we do have the high of the fair value gap gets tagged. So what is this? Also a hourly low. Hourly low gets tagged, as well as equal lows here. Smash through, hourly imbalance gets touched, and we have immediate displacement. As you guys can see, the hourly candlestick comes above here, closes, comes down, holds it to the T, and then we immediately target these equal highs. So we'll go on to a lower time frame. So right here, as you can see, comes down, holds it, and then flies. So that's what we want to pay attention to, guys, how accurate these algorithms are with our concepts, right? So it holds here, the order block, with pretty nice precision. Let's see if we get something here off the 1 minute. Nothing on the 5 minute. This would be the order block. Nothing comes down back into it, especially because we have a nice fair value gap here, but nothing comes down into it. So let's go on to the 1 minute, see if something comes up here. Last move to the downside. Lows here. So we get displacement above it, and we have a fair value gap here mixed in with the order block. So you could take a trade based off of that. So it'd be something like this. So usually my stop would be under this right here. First TP would be like this gap and this high, and then you could target the equal highs and leave a runner for that. Get about a 5.6. Pretty nice. Yeah, let's get a bearish example here, because I've been just showing you guys bullish ones. Let's see if we can find a bearish. Okay, so take out this high. We have a imbalance here, also holding the overall price leg. So it took out the high, had a reason to reject this area because of the fair value gap that was unfilled. We also didn't take out this high because this high took out these highs. So this is no longer an equal high because these ones got taken out, and this one is much higher. So order block is there. Did we displace through it? Yup. Came back into it, and well, there is no fair value gap here, guys, but what is there? An inversion fair value gap right to the T of the consequent encroachment of it. And there you go, guys. Super clean. Easily could have took a trade off that. Something like this. Targeting this gap for a 2RR. And you could leave a runner ultimately for these lows, but there's also another gap here that would target. And then yeah, leave the runner. Next example, we'll do one more example. And see if that'll be it. Because I don't want to go too deep into order blocks. I really don't. I don't use them that much. I just use it as confirmation. So if I see my trade, I see my setup, I see my fair value gaps, the sweep of liquidity. So like the whole strategy. If I see it formulating and I just see a order block there as well, then I'll just be like, okay, that's extra confluence. So I like this trade even more. It's not really something that I take a trade based off of. So I'm not going to go too in depth into that. If you want to learn more about that, just go on ICT's videos and YouTube channel. You can find some stuff there. But yeah, we'll go over one more breakdown of this. This one's so clean, but it looks like he would have been stopped out actually. Check that out. Order block, swept this high, imbalance. And we also have a fair value gap, but then unfortunately looks like he still would have got stopped out. And I'm assuming that the US 500 didn't take out this high. So let's check that out. Oh shit. Let's check. So what is the dates? 16th, 9/15. Yeah, there you go. Didn't take out the high. This would have been a beautiful setup on the Nasdaq, but it just ended up playing out on the US 500. So yeah, we didn't take out this high. This is the 915 candlestick that I was talking about. We have an SMT that I think the next video is going to be on. So yeah, this would have been a beautiful A+ setup, but unfortunately some do not play out. But still would have taken this regardless. With something like this in the fair value gap and target these lows for about a 2RR and possibly leave a runner for this, but it didn't. Price didn't end up reaching for that, which is okay. But would have got stopped out regardless. This is the order block. The body's kind of held, kind of went above it a bit, but yeah, we just got a massive wick. Took the stops out and then dumped, so that would have been an unfortunate scenario. And yeah, that's pretty much it. There's some common mistakes about like order blocks, like sometimes you just pick random down candles before an up move. That's not the order block. It has to be specific. There has to be a fair value gap to make it high probability. There has to be a low that gets taken out. There has to be a couple added things here, and there has to be displacement too, guys. You can't ignore displacement. There can't just be wicks above the close. Like, if you know what you're doing, then that's okay. But if you don't and you're new, then that's a problem, guys, because then it probably will go against you, and you'll probably end up losing the trade if you get in. And also trading order blocks against higher time frame draws and biases, guys. That also will lower the probability of the order block you're trading off of. So definitely don't do that. And yeah, that's pretty much it for the order block introduction. Not gonna go too deep into it. Let me know if you guys have any questions. And yeah, that's pretty much it for this video. Peace.